What is up guys, welcome back to my channel GG Forex, and on today's video we're going to discuss the topic, is Forex trading gambling? Right, I've gone through Answer the Public and gone through a lot of the questions of what you guys are actually asking out there. Like, is it gambling? Is there a way to make it not gambling? You know, just a lot of these questions have come from kind of like shady people teaching people how to trade Forex. If you think about it, all you got to do is go for a charts and say, yeah, it's going to go up here, it's going to go down here. And then you can kind of make up a reason of why you think that. And you're going to be right a certain percentage of the time. So in order to cancel out all that shady stuff, this video is going to answer all those questions. So, number one reason for why people think it's gambling is people move stop losses if you don't even have stop losses. So if you think about it, you're in a trade, you got your stop loss set here, and it's kind of working against you. It's not quite hitting your stop loss and you think it's going to go down for whatever reason. And instead of keeping your stop loss there to go with your strategy, you're going against the strategy and you're going, oh, okay, I'm just going to increase the stop loss just in case it hits it because I think it's still going to go down later. What you're doing there is you're increasing the risk, especially if you're already risking more than 2% of your account on any trade. That's gambling straight over. That's a different section. But if you increase your stop loss, you increase your risk percentage, you increase the risk of losing X amount of your capital in your entire trading account. So that is number one biggest reason. If you're doing this, if you're increasing your stop losses, technically you're gambling because you're not sticking to a strategy, you're going against it, and you're risking more money than you originally intended to lose in the first place. So that's number one. If you're doing this, stick to your stop losses. If it hits your stop loss, figure out why that hit, learn from it, move on. Do not move your stop losses. Or if you don't have one, get one. Okay? Number two, don't increase your risk size. So as I said before, 2% is the maximum amount of risk you want to take out on any trade to your entire account. So if you've got a £1,000 account or a $1,000 account, you only want to risk £20 per trade. That is it. And obviously, if you put more than one trade on, you're going to be risking £19 and something cents for that 2% because obviously your capital's gone down again. So you don't want to risk more than 2% purely because you will burn for your account, especially in the early days. That's why I did it on a demo account. I lost 14 grand in 2 weeks. So imagine if I started out with that with real money, I'd be like, oh my God. And I was only risking 2% on any trade. I never went over that and I still lost because I'm figuring out the process. So if you risk more than 2% on your trades, you're not going to last long in Forex. That is a fact. you maybe even don't do 2%, do 1%. Just reduce the risk as much as possible, because remember, at the end of the day, you want to lose small, you want to win big. I know that sounds like a gambly term, but when you're using analytics and charts and history, obviously all these things aren't guarantees of that trade working out in the future because anything can happen, and I'll explain why in a sec. But stick to your plan. No more than 2% of your entire trading account on any one trade. Write this down. Get pen and paper, write this down. Don't cover the losses on your next trade. So let's say you risk 2% on your trade and then you lost that trade, and then the next trade you risk 4% to recover your losses the last one and then make a profit on the second one. Because imagine if you lost that one for some weird reason, something happened in the market, you lost that one, so now you've lost 4% of your account in 2 trades, right? No you don't, you've lost 6% of your account within 2 trades. And let's say you lose that one, then you risk 6%, and then you risk 8% to try and recover the losses. Before you look at it, you've lost 20% of your entire account with just a handful of trades. That is the serious problem that a lot of people have. That's the gambling mindset. Because when you go to a casino, you play blackjack, you're like, yeah, you lose a hand, you go, it doesn't work, I'll double it on the next one and I can win back the profits, and blah, 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 you know? That's the number one reason why a lot of people burn for their accounts very fast, and then when they do this, they go, Forex is a scam, Forex is just gambling. It's because they're treating it like a gambling platform. Yes, you can make a lot of money, yes, you can make a lot of money very quickly, but if you treat it like it's a casino, the house always wins. So the market always wins, which means you're gonna lose. So reduce the risk, okay? Do not up the risk of your next trades to cover your losses of your previous trade. That's another very important. Write this one down. Remember all of these. Next one, not sticking to a trading plan. Now your trading plan is one of the most important things ever. I've only just started to do it because I've only just learnt about it. And I'll go through my trading plan and I'm still filling out the form and everything of how I'm gonna do this. But your trading plan basically is what time you're gonna trade at, what markets you're gonna trade, what time frames you're gonna trade, what currencies you're gonna trade, and what strategies you're gonna use. And the only way, it's like running Facebook ads, right? If you've done this before, you only change one variable for each ad set, which means when something doesn't work, you know what didn't work. It's easy to spot. Okay, so this interest didn't work for this subject or whatever. Same with your trading plan. If you're not following the plan, you don't know what's going wrong because everything's changing at the same time. So if you're saying to your plan, oh, okay, I'm going to trade the European market. So in the UK, that'll be 6 in the morning to 8 in the morning. Maybe that'll be your time frame before you go to work, or your 9 till 5 or whatever. If you then start trading randomly throughout the day, you don't know if, oh, okay, what time frame worked for me here? What time frame worked for me there? You don't really know what's working, what's don't, if you keep changing everything all the time. So sticking to certain currencies. For me, it's the majors. So anything trading with the US dollar, I'm trading the European market, and I'm only trading on 180 phase changer and T-wave strategies, and I'm only trading probably between 6 in the morning and 8 in the morning. I'm sticking to that, so then if anything doesn't work and I want to make changes, I can look back and go, okay, so maybe I'm not profitable at 6 in the morning to 8 in the morning, maybe I'm profitable from 12 in the afternoon to 4 in the afternoon when the US market hits and it's a bit more volatile. Maybe that's my best way to improve, but you have to stick to a trading plan to understand where you're going right, where you're going wrong, so then you can move forwards and become a better trader. So that's the next thing. So make sure you're writing all this down, guys. The biggest one for most of everything out of this is going with a gut feeling. Like, I know as blokes, we have pigeon's instinct to go, oh, I know what's going on here, or directions. We think we know where we're going. We don't. No one knows what the market's doing. $5.1 trillion are being traded every day. Well, Monday to Friday, 24 hours a day, 5 days a week. Monday to Friday, $5.1 trillion a day is being traded. So, if you think you can control the moves of the market, you can't. 96% of that 5.1 trillion is banks and hedge funds. The 4% is us. We do not control whether the market goes up, we don't control whether it goes down. We are not big enough players in the market to be doing those trades. We're betting a couple thousand, maybe even betting a couple hundred. The banks and hedge funds are betting millions each trade, okay? And they're only risking 2% as well. So all you are as a surfer in the market. You've got to use your analytical skills to understand whether it's going to go up, whether it's going to go down, whether to go sideways, whether to get in, whether to get out. You do not control the movement, the banks and hedge funds do. You're just riding the wave. That is it. So do not go with your gut. Go with what is in front of you. Is the higher time frame agreeing with this trend line? Is it a trend line? Is it a random spike? Has something happened in the news to make it go right up? Maybe you shouldn't trade when the news is on because the market is unpredictable. Can you see a clean higher highs and higher lows? Is it, or lower highs and lower lows? Like, you have to look at the charts and analyze everything. And if one thing doesn't agree with your rules, then you don't trade. You walk away. You don't go, yeah, but I got a feeling, and then do it anyway, because that's gambling. That goes with, I'm feeling lucky today. Or another great example is, imagine if you got 5 trades in a row, you're feeling good, you risk 2% in each trade, you stuck to your plan. Great, good start, you got 5 trades in a row, you're a boss. But what happens if you then go, right, I'm feeling lucky, and then on your 6th trade you risk 10% and then you lose? What you've done is wiped out all your previous profits from your last 5 trades in one trade. Just because you had a feeling. So stick to the plan, stick to 2% risk, stay consistent to your plan and your strategies, and do not avoid them. It's really hard. especially because trading is such an emotional sport. It is an emotional sport. People think it's really easy. All you got to do is guess whether it goes up or down. Technically, yes. But in order to get that information and process the information and make a logical decision, because at the end of the day, your money is on the line, it's not someone else's. It's really hard and it's really easy to get carried away when things are going well to risk more because you think you're on a lucky winning streak, which you're not, because that is gambling. And if you think about gambling, is Forex gambling? No, because the banks are doing it with your money anyway. So you get your money from your work and then you put it in the bank, and then these banks trade it all the time. Why do you think they like mortgages so much? Because you're putting money into the bank 24/7. You need money in there. Why do you think they lend you money? Like, you take £10,000 in cash, you put it in your bank account, they turn that into digital money, and then they lend it out loads of times and trade it on the Forex markets. Remember, Forex is currencies. Currencies is not going to go away. And if it does go away, it's going to go away in another form. That is still currency. We're going to need currencies. So don't worry about, is Forex a scam or anything? No, it's not a scam. Is it gambling? No, only if you treat it like gambling for all the points I just said, okay? So I hope this has cleared things up. If you've noticed that what I've said, you're doing these things, realize it, stop it, and then readjust what your trading plan is. Because if you're risking more than 2% of your entire account, that's too much. Okay, and if you don't know what 2% of your entire account is, luckily I've got smart charts that does all the calculations for me. So my account would be £1,000, risking 2%, so that's £20 on that trade. I'm risking that, and that's it. That's where my stop loss is going, done. So I don't need to worry about that. Obviously, you're on different platforms, you might have to do the maths yourself. Don't have a clue how to do that. I'm sure you can get a calculator out, do some long division, and then figure out that way. But only risk 2%, okay? So, if you enjoyed this video, guys, and you found it helpful or in any way, shape or form, please leave a comment below, and also hit the like button and hit the subscribe button, because I want to make more videos like this, and I love teaching you guys and learning along the way on my process from being furloughed to learning how to trade Forex. Okay? Right, thank you guys, I'll see you on the next one.